What if I told you two people can invest the exact same amount, earn the exact same returns, and retire at the exact same age, and one of them walks away with hundreds of thousands of dollars more? No stock picking, no crypto luck, no timing the market. Just one decision made before the money was ever invested. Roth IRA or Traditional IRA. Most people choose the wrong one, not because they're stupid, but because no one explains this clearly. By the end of this video, you'll know exactly which IRA is better for you and how one simple switch could save you a fortune in taxes. First, let's reset something important. An IRA is not an investment. It's a tax wrapper. Think of it like a backpack. You don't earn money from the backpack. You earn money from what you put inside it: stocks, ETFs, mutual funds. The only real difference between Roth and Traditional is when the government takes its cut. That's it. Not how you invest. Not what you invest in. Just when taxes are paid. Now let's break them down, starting with the one most people think they understand. A traditional IRA gives you a tax break today. You put money in, it reduces your taxable income, and you pay less tax this year. That sounds amazing. But here's the catch. You're not avoiding taxes. You're deferring them. When you retire and start withdrawing money, every single dollar you pull out is taxed as ordinary income. Not capital gains. Not some special rate. Income. So the real question becomes this: will your tax rate be lower or higher in retirement? Because if it's higher, that tax break quietly turns into a tax trap. Now let's talk about the Roth IRA. This one feels painful at first. You contribute after-tax money. There's no deduction, no immediate reward. But then, something powerful happens. Your money grows. Your investments compound. And when you retire, you withdraw every single dollar tax-free. Not just your contributions. Not just part of the gains. All of it. That includes decades of growth. So Roth flips the script completely. You pay taxes now, so future you never has to worry about them ever again. Let's make this real. Two investors. Same age. Same investments. Same returns. Each ends up with $1 million at retirement. Investor A used a traditional IRA. Their tax rate in retirement is 25%. They withdraw their money and lose $250,000 to taxes. They keep $750,000. Investor B used a Roth IRA. Their tax rate in retirement doesn't matter. They withdraw the same $1 million and keep every single dollar. Same discipline. Same investing skill. One decision made decades earlier created a $250,000 difference. That's not optimization. That's life-changing. So which one is actually better? Here's the truth most videos won't say. Neither is better by default. The right choice depends on one thing: your tax rate now versus your tax rate later. A traditional IRA can make sense if you're in a high tax bracket today, if you expect lower income in retirement, or if you need the deduction to free up cash right now. A Roth IRA makes sense if you're early in your career, if your income is likely to increase, if you want tax certainty, or if you believe taxes will rise in the future. And let's be honest, with government debt exploding, social programs under pressure, and tax rates historically low, betting on higher future taxes isn't crazy. Now here's the power move most people miss. Smart investors don't choose one. They use both. Why? Because having money in taxable accounts, traditional IRAs and Roth IRAs gives you flexibility in retirement. You control how much you withdraw, where it comes from, and how much tax you pay each year. That's how wealthy retirees keep their tax bills shockingly low legally. not loopholes. Just strategy. Now let's clear up a few common mistakes. Roth is not always better. High earners close to retirement may benefit more from traditional. Traditional doesn't automatically save more money. That only works if your future tax rate is lower, which is never guaranteed. And saying you'll decide later is still a decision. You're choosing the default. Here's the simplest rule to remember. If you want a tax break today, think Traditional IRA. If you want tax-free wealth tomorrow, think Roth IRA. But the real winners plan for both versions of themselves. The one earning now and the one spending later. If this video saved you from a bad decision, hit like, subscribe, and share it with someone who's still guessing. Because in investing, what you keep matters more than what you make.